Headline level, guys, nada.
Yeah, nada. So you know what I'm going to talk about? I'm going to talk about Meta because it's up 17 in a row. So we're talking about a gain of 18%. We talked about it yesterday. A stock that has had the most consecutive gains. What a run. Just up about 0.3%, but nonetheless 17 in a row, up 18% in that time. So
it could have been one of your gainers, Carol.
I know.
I
was going to, but it was down.
It was teetering, yeah.
It was teetering.
Yeah, you don't want to risk it.
No.
Finley doesn't like that. Hey, equity indices aren't doing much. Bitcoin down 2.2%, just trading around $95,000 per Bitcoin.
I wonder if the CPI report is going to be more of a catalyst for something tomorrow. Volatility around the CPI report, according to some analysts, might be kind of limited because the Fed's not going to count on this one CPI report to make its next decision, right? I mean, it's going to be a couple of data points, a couple of CPI reports, a couple of jobs reports. So, the stakes are not as high for this CPI report, but it'll be super interesting given that it might color Jay Powell's day 2 testimony.
Or at least they'll definitely get questions. He'll definitely get questions on that for sure. But I guess it's a direction of travel, right? We were talking earlier about inflation break-evens, particularly for 2-year, continue to rise. And we talked about Jay Powell not having entrenched inflation expectations, not seeing that in the market, but those expectations continue to move higher. All right, there's the closing bell, guys. Headline level, real uneventful. The S&P ending pretty much flat. The Nasdaq is the biggest loser of the day, but still just off by about 0.4%. And the Dow Jones Industrial Average off by about 0.3%. And just trying to take into account here what's happening with small and mid caps, also like a little bit softer, but guys, nothing to write home about.
Yeah, it's like ho-hum, right? S&P 500, kind of an even split. 261 names to the upside, Scarlet 241 to the downside.
All right, let's take a look at the IMAP, which splits the S&P 500 into its 11 main sectors. And there is more green than there is red, and it's led by consumer staples, up about 0.9%. Energy stocks and material stocks also gaining at least 0.5%. The laggards of the day include consumer discretionary, which really is, we're talking about auto companies, automakers, which as a group are down about 5%. Healthcare stocks also marginally lower, and communication services just barely in the red.
All right, guys, 2 individual gainers. Intel, it's a top gainer in both the Nasdaq 100 and the S&P 500 on this Tuesday. This is coming after Vice President J.D. Vance over at the AI Summit in France said that the Trump administration will make sure that the most sophisticated artificial intelligence hardware is made right here in the United States. The two, you might remember, I'm talking also about global foundries, because if we bring that one up as well, Intel's up about 6% here at the close. Same, global foundries up about 6% as well. Those two companies are the largest U.S.-based operators of semi-foundries that make chips for outside customers. So, yeah, no surprise to see them gaining. And then Coca-Cola, it's up about 4.7% here at the close. The company coming out, fourth quarter organic sales growth and profit topping Wall Street expectations, and analysts calling the company's annual outlook pretty solid. So again, some outperformance by those names. Okay,
Scarlett mentioned that automakers were lower. Tesla helping to pull them down. 6.3% to the downside for Tesla. Down for a 5th day in a row, all because of BYD. Over in China, the company added advanced driver assistance features across most of its lineup for no extra cost. Its shares hit a record and Tesla moved lower. It's called the God's Eye Driver Assistance Program. Standard in vehicles priced from about $13,700. Can you believe that price point? It's also included it in several low-cost models, such as that Seagull hatchback. Tesla down about 32% from those December highs.
Let me just jump in because Gilead Sciences, or Gilead as it's now known, just reported results. Let's give you what happened in the fourth quarter. EPS of $1.90, beating the average analyst estimate of $1.71. Revenue of $7.57 billion, also higher than what was anticipated. In addition, Gilead raises its quarterly dividend to 79 cents a share. The profit forecast as well, topping analyst estimates. 2025 adjusted EPS anywhere from $7.70 to $8.10. Analysts were looking for $7.54. That stock higher by almost 3%.
All right, let's get to Avis. It's down about 5% here in the aftermarket. Fourth quarter results, America's revenue, we're looking at $2.12 billion. That's pretty much what the estimate was, $2.11 billion. International revenue, we're talking about $593 million. That's a little bit light. The estimate was for $602.4. We're looking also at overall revenue, $2.71 billion, smack on what the street was expecting. But we are again seeing this stock down in the aftermarket. It's kind of interesting. It's been up about 11% year to date, but we are seeing some disappointment here in the trade.
Yeah.
Yeah, also one headline, Avis Budget has named Brian Choi to succeed Joe Ferraro as its CEO. Shares right now down about 5.2%. Well, speaking of shares that are lower, Coty shares finished the day down by more than 9% today, hitting their lowest level going back to 2022. The company did lower its full-year profit projections and reported fiscal second quarter revenue that missed Wall Street expectations. And then check this one out. Fluence Energy shares really taking a dive today. The company reported that it slashed sales guidance and cited contract delays in Australia. Shout out to Carol Massar for directing me to this one. Shares falling today by more than 46%.
What an ugly chart.
Yeah, that's you need a 2-day chart for that puppy. That's rough. Okay, taking a look at the bond market for a bit here, guys. The back end selling up just a touch, yields up by about 3 to 4 basis points. We had that 3-year auction, though, $58 billion. That came in pretty strong. Demand was really there. Then we get the 10-year and the 30-year later on in this week, too. So, again, looking for that supply digestion. But many tend to look at 4.5% on the 10-year as like that level that then do we sort of propel higher and get to 5%. That's sort of the line in the sand a little bit. So interesting to see how we trade tomorrow.
You know, it's interesting. I want to go back to the trade. And, you know, we were talking about the CPI report tomorrow, followed by then the following day, PPI. But we were talking with Mike McKee earlier out of Washington, who broke down the Jay Powell talk, and also Gina Martin Adams watching the markets. And they said, we are kind of watching this. There's so much coming out of investors that, you know, little clues that we can get even from economic data points, certainly something like inflation, it's important.
Yeah, although John Authors has pointed this out. If you listen to companies' earnings calls, they aren't talking as much about inflation anymore. I mean, tariffs has kind of taken the place because that is a big question mark, and the impact on what it means for inflation is still very uncertain.
All right, we're getting some more earnings crossed right now. DoorDash crossing as well as Lyft. Lyft sees first quarter adjusted EBITDA about $90 to $95 million. Estimates were for $93.7 million. Fourth quarter gross bookings came in just shy of estimates at $4.28 billion. Lyft, though, buying back up to $500 million of shares. Shares of Lyft right now in the after hours higher by about 6.7%. Fourth quarter rides coming in just in line with estimates at 218.5 million, and fourth quarter adjusted net coming in above estimates at $114.5 million. All
right, going to DoorDash here, guys. For the fourth quarter, it looks to be a beat on revenue, a beat on orders. In terms of earnings, it might have come in a little bit light. Now, taking a look at their first quarter, the big headline is that gross order value. They now see at the high end of that $23 billion. The estimate was for under 23, so that also is a beat. Their adjusted EBITDA on the high end also beating. So pretty strong results from DoorDash, even though that stock is down 2%.
Yeah, you know, I'm just watching Lyft, though, here in the aftermarket. It's bouncing around a lot. It's up 2.5%, then it's up just about 0.75%. But keep in mind that buyback, definitely a bit of an eye-popping number. But it is interesting that it's its first buyback program, buying up to $500 million worth of shares. So investors, though, you know, bouncing around in terms of these results here.
I noticed that as well, and it suggests it's a consistent return of capital to shareholders that we're going to wait to hear in the conference call how they address that and to what extent that means that business is going well, that they feel confident enough to go buy back their own shares. You know, I look at the DoorDash results and I'm sorry, I can't help but be colored by emotion.
I knew you were going to do this.
Yeah, well,
she doesn't like DoorDash.
I was talking about this at the meeting because my son orders way too much of it. And, you know, as a Gen Xer, this idea that you're going to pay X% of the final bill on service costs and delivery fees, it's bananas.
I've talked to these young people, Scarlet, before, and they have to, like, delete the app from their phone because they're spending too much money.
Because they're so used to it. Well, they don't have any basis of comparison. The fact that you, like, a big chunk of your final bill is on delivery, just, oh.
It just, yeah. Well, I mean, you have to pay for it. They're talking, though, in their earnings release about some new initiatives that they're hoping to introduce to give valuable services for customers, merchants, as well as dashers, as they call it. And they said that they exited 2024 with some good momentum. So still trying to find out, you know, the reason why that stock is still getting hit. But nonetheless, interesting when it talks about its really strong order demand.
Yeah, interesting to see. And we are seeing some movement here. So we'll see how they kind of settle in the aftermarket and on those analyst calls. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We'll see you again, same time, same place tomorrow.